Hi, this is Dave Diegelman with Equity Real Estate. We're here for our March 2023 market report for Southern Utah. And I want to take you through the numbers as I always do. It's exciting to me. What a whirlwind this has been the last year and a half, 2 years. Incredible. I've never seen anything like it. But now we're in a normal marketplace. So let's take a look at the numbers. So right now the number of listings, you can see that they grew. The height was October of 2022. It's 1717 thereabouts. Right now we're hovering around 1500. So again, that's a healthy marketplace. Our normal marketplace, I would say, for Southern Utah, in my experience in the last 10 years or so, has been between 1,400 and 1,800 units. That's kind of been a normal marketplace. So, certainly that's strong. Let's look at the sold listings down here. So the end of February boasted 259 sales. And if we look back at the end of March from last year, it was 542. So a significant difference, but I should say that March as a month typically picks up quite a bit from February. And so we might have a 10 or 20% pickup from the numbers over here in February, and it would make it a little bit closer. So yes, our market is down compared to last year quite a bit, but it's not tanking, and I'll show you that in a few minutes. So the listing prices, this isn't going to reflect that an average, like in this case, the active median price was 719,000 and some change last March, and right now it's hovering at 619. That doesn't mean that that $719,000 home came down to $619,000, because there's different market segments and it has to do with how many homes come on in each segment. But overall, I would just comment and say that we've come down about 10% from the very frenzy that we were in last year, and part of that was from over speculation, part of it is price corrections. But we also had appreciation last year of anywhere from 16 to 24% in different marketplaces. So if you were a seller, for example, 10% off of those types of appreciation numbers, not a bad deal. If you're a buyer, well, prices are high. They're not likely to come down drastically. We'll go into that in a few minutes. Absorption rate down here, I like to go over this one because absorption rate is how much inventory we have versus how many sales we have every month. Healthy marketplaces, anywhere from 2 to 4 months, actually 3 to 5 months, Southern Utah, kind of in that range. Right now we're hovering at 4%, have been there since October. So healthy marketplace. The sold to list ratio, I pay very close attention to this. So you can see that it was actually above listing price. It was 101%. Back in March of 2022, or May of 2022, excuse me. So that means that there was multiple offers and it was bidding up above list price on average. So that's how crazy that marketplace was. Our low was last month, January, and it was at about 93%. Right now it's hovering the end of February at about 94%. So what that means is the average home that gets put on the market gets negotiated down somehow by 6% right now. And for buyers, that's good news. There is sometimes negotiation room. Sometimes sellers are willing to contribute if you have a loan towards the points and closing costs, and it makes it a lot more digestible. Also, refinance programs over the next 10 years, for example, if you lock into a 10-year ARM or even a 30-year fixed or a 15-year fixed, there's probably going to be a chance over the next 5 to 10 years to refinance at a lower rate. Historically, that's kind of what things have shown, but also we are under the historical rate mark of 8%, which is a 50-year rate average. And so we're under that right now. So, it's not the end of the world, but it certainly will not go back to that 3% anytime soon, that I can see anyway. Days on the market. This is when a property gets put on the market, how long does it take to go under contract? So you can see in our frenzy, we were sitting at about 20 days. That means there's a lot of cash buyers or a lot of buyers who have already been through underwriting, meaning in a lot of cases they have put offers in on homes, and then for some reason that fell out, but they already went through underwriting. Anyway, Now we're up about 73 days, and that's kind of normal. Some houses take quite a bit longer than 73 days to market. Other houses will take quite a bit less, but that's our average right now, days on the market. Price volume I don't pay a lot of attention to except down in the solds, and this is just how many millions we have per month that are selling. So for example, in February we closed out at $139 million worth of sales for Washington County. Now if we go back a year in March, which again March has that increase anyway, it was at 359 million. So quite a bit more, but overall when we take all the compensations and where the market is, we're just in a healthy marketplace. So let's look at the numbers down here. Sold listings, you can still see that the highest category that we have for month and year to date are going to be in the $500,000 to $750,000 range. The next highest was actually the $450,000 to $499,000, and then after that, right behind that was $1 million to $2 million, or I'm sorry, $750,000 to $1 million. It was interesting. If I took these three categories from 500 to 2 million and added those together, what I get is 110 units that have sold in 2023 versus now if I go to the 450 or 500,000 down to the 350, take those three numbers versus these three numbers, it's 91. So we actually have more sales in the category of 500 to 1 million. So what does that tell me about the marketplace? Again, we're in a healthy marketplace for where our inventory is coming in at right now. We don't have a lot of inventory under $500,000. So it does reflect that we have a strong, healthy marketplace. Now, pending listings are listings that are under contract. We don't know how much they're under contract for. We only know their original, listing price. But that doesn't change too much from the sold, so I'm not going to focus on that. Active listings, you can see we have a big buildup right here in the 750 to $1 million and a big buildup in the 500 to 750. I would expect that in the marketplace that we're in. The one that surprises me probably the most here is the 1 to 2 million. We have a buildup there, but if we go up here, we have some fairly good sales in that range. Now 13 sales, 23 sales year to date. Those aren't huge numbers, but they are significant because down here in the 1 to 2 million, we have an inventory buildup. So what that tells me is that there are going to be some bargains, if you will, in that price range, because right now a lot of these properties down here that are listed on the market, you could not replicate for the price that they're on the market for. So that always tells me, where good deals are. New listings coming on the market, no surprise, 750 to $1 million and $1 million to $2 million are, high categories, but the highest one is 500 to 750. So that's where inventory is coming on. So I would also expect that we'll see some deals in the 500 to 750 as we actually already have in that area. So overall, the numbers look really strong. We're going to go over to one other thing over here, which is First American Title's report that they put out. And you can see this on my actual report. If you go below the YouTube video, if you're watching that, you'll see the link for going directly into these reports and shows it there. But I'm going to go over two things today. Number one is market price per square foot, because this is very misconceived. A lot of times clients will ask me, how much is that per square foot? Now, if we're looking at 1,500 square foot homes and we're comparing a 1,500 square foot home to a 1,500 square foot home, that's all good. If we're looking at 3,500 square foot homes and comparing them to the 1,500s, it's going to be all over the map, because typically the price per square foot on a 1,500 square foot home is way higher than the price per square foot of a 3,500 square foot home. So I don't want you to, feel like this is a great gauge. It is per category, it's a gauge to look at. But then you can also have features that will change that drastically. If one has Wolf appliances and a Sub-Zero refrigerator freezer versus, GE appliances, there's going to be a difference in price per square foot on what money's put into the property. So right now we're hovering just on an average at 294. Our peak, which was in June and July of 2022, was 306. So we'll look at one other thing here, and that is the market time. Average days on market. You can see historically from 2018 to 2020, we kind of hover at 100 days. It's going to go down to the 70-day mark. It's going to go up as high as 95, 109 days. So right now we're sitting at a healthy 79. That's a very healthy place in the marketplace. So right now, if you're a buyer, there's some very specific strategies that you want to follow. I go into that a little bit in the report, but you can always call me. I'll give you my number at the end of this report, at the end of this video. But you definitely want to be aware of the market changes and the things to look out for. As a seller, the market's drastically changed for you. There's a lot more competition. There's a ton more strategy that is in place versus last year. So if you do have questions on these strategies, we outline them in the report a little bit, but feel free to give me a call. My direct private line is 435-703-4041. I wanted to also mention that we have our social media icons. Feel free to share this video or the report on your social media. We love it when people do that. And feel free to follow me, whatever it may be, on different social medias. We do post a lot of interesting commentary on the marketplace and just fun stuff about Southern Utah. So I hope you've enjoyed this. God bless you. Have a blessed 2023.